Hey RJ, can you hear me?
There you go.
Hey RJ, you there?
Hey, how you doing, Shawn?
Man, how's it going? Doing good. How are you?
Doing good. Just been a little crazy day, but all is well. All is well.
It's good to hear, man. As long as your day's going good, it's all that matters.
Yes, sir. Yes, sir.
Definitely, definitely. So, did you take any trades today, or are you just hanging out?
I took a couple trades. One I messed up. I know I messed up.
It happens. It happens.
I was watching the live. Today I was a little bit more distracted. And I thought the scalp that you were looking at, you called a buy when you called it. And then when I looked at it again later, I said, dog, he called a sell instead of the buy. So I missed it wrong. So I took an L on that one. And it looked like I took an L on the daily today too. So it was one of my ugliest days, but I was like, it's all good. I just get it back in the market a little bit later.
Yeah, I mean, it's all good. You know what happens? Like, that's the problem with trading. It's kind of hard when you're live. If you're following live, it's hard for you to kind of like, be focused, because focus is like the main thing when you're taking these trades, especially with the daily. That's why I kind of sent that reminder out. So I don't know if you enter it as a market. Did you enter like as a market order for the buy?
I did enter a market because I was back and forth between the live session. I just had a lot going on today. So
Yeah.
I kind of had on my trading view, I was looking at the first indicator after the 930. And
Hmm.
when the first indicator came out, it came out as a buy. But then I listened a little bit later and I was like, oh, he said he didn't really like that candle because of how it pushed through so fast. But at that point, I was already in and I said, all right, let me
Oh
see if we
man,
get back to at least my break even. And it was like, nah, it
it
kept going,
never
it
came
kept
back.
going
It
down.
never came back.
And I was like, dang, that's one of my ugliest days I've had in a while. But I was like, you know what? Before it used to tick me off the most and like, yo, I can't keep, I can't lose this. But I said, you know what? If I slow it down, I can get it back by the end of the week.
Exactly. Yeah. It's a back and forth game. Like, even myself, I still make mistakes all the time, and I make it back after, the next trade or so, because it's just one trade, like the next trade could be a good trade, and then it could be followed by a bunch of good trades. Like last night, I think we're on a streak right now for US 30 for the scalps. I think I had about like four back-to-back wins. So I'm pretty much good for right now. And I'm not really taking it too crazy. I'm just taking it easy. And when it comes, it comes. If not, I'm just gonna keep waiting.
And I've been seeing a lot of people in the chat talking about the scalps, and I've been watching the videos, and I just haven't gotten that comfortable. And I said, okay, they killing it on the scalps, so
Hmm.
I know it's got to be me. so, so that's where I was with that. And I said, man, when I heard you say something about the one-on-ones, I was like, all right, cool. Let me see if I can get in because I know everybody killing on the scalps, and if I haven't been doing the scalps. I've been doing the regular K2.
Yeah.
But the issue, like I said, I don't, like I said, I don't know if it's something I'm doing wrong. That's why I said, to be able to find out maybe what I'm doing wrong, because the first couple of times I was hitting on just a regular strategy with the meter at the bottom as well.
Oh,
Um,
intraday strategy. Yeah.
Intraday strategy. So I was hitting like, all right, I'm looking at cool. I got a buy. I got a valid signal. Is matching with my strength meter on the direction that it's going. I'm like, all right, cool. So I'll put it in. The first couple of days, I felt like I was hitting it pretty good, but then after that, I just started taking more and more stop losses. So I was like, all right, maybe it's the time frame I'm looking at or something I did wrong.
Yeah, no, definitely. Yeah. If you got those, like, if you have them like in mind, we can take a look at them and see, what went wrong. Because there's a lot of different things. Whenever it's actually kind of good when you run into losses, because when you run into losses, it makes you think, like, it makes you go back and just, reanalyze it, see what you did wrong, so that you don't make that again moving forward. So if you got those in mind, we can take a look at them. Or if there's anything you want to cover specifically, I mean, we can knock out everything today. It just depends on how many questions you got.
Yeah, like I said, I'm hoping I don't have too many questions for real, for real. Like I said, the scout is the one I really, really want to learn because I've been seeing everybody killing it with the scout, and I'm like, I feel like that one person who just left behind.
Yeah, no, like right now, the market's just a scalping market because the market keeps bouncing back and forth. So it's kind of hard for you to catch like really good intraday trades, because normally we'll take some intraday trades or some like sort of swing trades, and we'll take trades and they'll go to like 100 pips and we'll be smooth. But lately for this year, I'm not sure if it's just because Biden is in the house now or if there's other stuff going on, but the price has been kind of choppy. It's been back and forth. So it's kind of hard to catch those bigger moves. Or if you do have to catch those bigger moves, it usually takes longer.
Okay. Yeah, because like I said, I know on regular currency pairs, I was going, sometimes it was like 15 pips. It's been 20 pips at that. But then, like I said, the first couple of days, I was hitting. Then I was like, all right, I'm looking at things. I was like, maybe it's just the market how it's been choppy, but I was like, I've been catching more stop losses than anything on those. Then I started jumping on the lives, and I've been getting pretty good. The days where they actually left me alone at work, I was real good. But I was like, all right, I got to get some confidence too.
Yeah, no, definitely. Yeah. So when you're doing the intraday strategy, what time frame are you trading on?
30 minutes.
Okay, cool. So that should be kind of solid. I think one other thing that you might need to keep in mind is, are you using the K2SR indicator to see where the rejection points are?
Not exactly. No.
Okay, so that might be the issue, because you might be entering like right when it reaches support or resistance. And generally, we like to just have those marked up so that you can see, you can have an idea like what are the odds of it rejecting off this point, because that might have been the case. I think that's probably the case where you ended up getting caught in like some trades that just ended up reversing as soon as you entered into them.
Okay.
Yeah.
That could definitely be it, because I know, like I said, I just loaded up the 30 minutes. I've been kind of trying to figure out which pairs I like the most. And then, I was happy just to get the indicators to start coming in right. Then I had the strength meter. I was just kind of riding off those, but I don't remember putting the SRs on there at all.
Gosh, okay. So that might have been the thing. So if you want to cover that, we can cover that. Or if you want to cover the scalping, we can just focus on the scalping. It's really up to you what you feel like doing.
Maybe we can do like one quick example with the SR on there, and then really the scalping. That's like I said, what I've been seeing everybody hitting, and I'm like, all right.
you got to hop in on that too.
That's the main one. I'm like, all right, if I can get hot on that, because I was, even with the one that you did this morning, I thought you were saying, and it might be just how I was reading the pivots. I was like, okay, he must be going for a buy. And then the buy indicator came on the 10 minute. So I'm like, all right, cool, he must be going for a buy. Then I looked it up. I was like, wait a minute. I'm in the area where he got his stop loss. I said, oh shoot. I said, I'm already 20. And I think when I went back to the recording, I heard you say, wait a minute, I got my settings are reversed. And however you typing it in, I said, okay, I think I heard the first part, but I didn't hear the second part.
Oh gosh, yeah. I think the TP and the stop loss were set at the same place, and that was the issue. That might have been the thing, and you probably put in the wrong numbers too when I put it in initially. Yeah, so let's go over one of the intraday trades. So what's one that you took that hit stop loss? We can pull that up right now so we can see.
Let me look up my MC4 right quick. It's almost like I lost my confidence a little bit with it, so I hadn't done it as much. Let me see. The last one that I took was a GA trade.
GA, let's check that out.
And it was actually my broker. It says on the 11th. It was the last one that I did it.
Gosh, all right, GA on the 11th. Okay, so it looks like you took this sell right here. This looks like the only one. That's
because I was in for a sale. Yeah, it was around. I got in at like 1.78240.
Gosh, okay, yeah, that looks about it. So let's so what I'm gonna do first is I'm gonna turn on the so obviously we do have the requirements here. The first requirement, you got a sell signal, and the second requirement, we have the trend meter down here. The third requirement, it's not necessary, but it's something that I've implemented moving forward. So if you look at that strategy, there's actually 3 videos. There's a version 1 where we're still using like 4 charts, and then the version 2 where I implemented the trend meter, and then the version 3 where I implemented the K2SR. So for this right here, it's a solid entry, but on top of that, we'd want to turn on the K2SR to see where the rejection points are, and you can see that there's actually it's actually like in a support right now. So if you look at this right here, it's actually in a support. So I probably wouldn't have taken this trade, because if I was to see that like with the K2SR, this kind of would have indicated that price is rejecting off this point. Like right here, you can see it tested it a couple times, and it looks like it's about to just reverse up this way.
Okay.
Do you kind of see that on my chart right here?
Yeah, I can see the chart. Can you take that box back off for a second and put the SR back on? I want to make sure I saw it correctly.
Yeah, so I'll take that off right there. I'll turn on the SR right here. And then you can see that this SR, the bottom of this one connects from here. So usually each zone has two levels. So it has a lower point and a higher point. So the lower point's right here. Let me just mark this up for you. Yeah, the lower point is right here.
Okay.
And then the higher point is up here. So this would fall under a full-on zone. So it was actually in a support zone at the time of entry right there.
Okay.
So if you were to look at that from like this perspective, I'll just move this stuff over. Yeah, if you were to look at this from there, and I just kind of hit this right here, you kind of see that it reached a support level where it's like a strong support. So if I zoom out from this point and I just take everything off, you can see that it's actually been testing that support for a while. Tested it like 1, 2, 3, and then again right here as it dropped below this point. So you can see that that price kind of it tried to break below it, but it didn't close. So generally, when you see that where price continues to test this like a specific support, odds are it's going to reject right off it from this point. But I mean, if you're not familiar with this, like identifying these things, you wouldn't have saw this. Like this is just a mistake that anyone would make unless you're like fully aware of like what's going on the chart. But yeah, I mean, if you play this right here, so if you enter, obviously you enter this trade, so you enter this for, I'm assuming a sell right here. As it matches the trend meter. Your stop loss is probably like right above here at the swing, which would be about, I guess, like 17 pips. So if you took that right there, it looks like it came down slightly. Yeah, so it came down to test that structure. As soon as it tested the structure, or I mean, it was already in the structure, it just came and rejected off the same points that it was rejecting over here. It just ended up shooting up from there. Okay. And that's how it stopped you out. But this is something that, obviously, if you're not familiar with identifying structure and stuff like that, it's an easy thing to miss. Like even myself, I still miss it sometimes if I don't like take my time to analyze everything. But I always try to implement the K2SRs to make sure, because the same thing happened right here. Like there's another sell entry right here. It's pretty much the same exact thing that happened. Like right here, there was a sell entry. It came to that support, and then it reversed from there because it was right at that support point.
Okay. So I got to do that more often. Okay.
Yeah. I mean, it's not necessary because sometimes you'll see over here where you don't even have to like pay attention to that. Sometimes there'll be a support and then it'll just play out. So if I rewind to here, let me see if this plays out. It just depends on how high you want to take your risk. Like if you want to be risky, then it could be completely fine. I'm trying to find a bad trade over here as well, so I can show you an example of where it actually works. Okay, so like this right here. So if I replay to this one over here, you can see that there's a buy entry here, but it's like right at the resistance. So technically, if you're using that, that same confirmation for the zones, you probably would have skipped this one right here. But if you're feeling risky and you just want to take it, which you could, I mean, there's like these requirements are just they're optional. This third requirement with the zones, it's optional. So if you were to skip this because it was at resistance, you probably would have missed out on this trade, and or actually would have stopped you out. So that actually might have been a good thing to avoid too. So depending on where you put your stop loss, if your stop loss is way down here, you probably would have been all right. Let me see this real quick.
Yeah, that's what I've been doing too. I've been kind of letting, and maybe I got to go back to doing, because like in one video it was talking about how adjusting the TP at the swing. Then another one was like talking about letting TradingView kind of.
Yeah. So there's two ways to do it. One way to do it is to put it at the swing down here. And if you just want a TradingView to do it, TradingView is actually more accurate. The only problem with TradingView is that sometimes it'll give you way too far of a swing, like farther than you want to put it. But like, for example, here, if I just use TradingView, like what I did was I zoomed out and then I hit the long tool right here and then I placed it right there. Actually, it's kind of the same. It's like right below the swing, but it gave you a little extra room. Okay. So if you did that and you let TradingView do it for you, let's see if it's on point. Yeah, it's actually perfectly on point if you let TradingView do it for you.
Now with that, you said I definitely got to zoom out for it to really pick up right, or?
Yeah, exactly. Because what it does is, so for example, let me go back to that same entry. Let's see, we were right over here. So I'll show you the difference, because if you're too close, like what happens is when you use the long tool, it pulls all of the data that's on the chart. So right here, like for example, if you were too close and you just have this data right here, and you click the long tool, it's going to be way too tight, right? It's going to be right here, 18 pips. Yeah.
Okay.
But if you zoom out, it takes all these candles into consideration when determining where the swing's at. So like right here, if you place that, it went from 80 pips to 43 pips.
Okay. I was wondering, I was like, yo, everybody getting the extra pips. And I'm like, man, I feel like I'm doing something wrong. I said, all right, I gotta zoom out. Okay.
Yeah, it's because obviously if you're intraday trading, you kind of want to get, all the candles on the chart. If you're scalping, then yeah, it makes sense to just be closer because you just want to go for those quick moves. But it's really up to you up to your preference, because some people don't like putting big stop losses. While some people don't really care. Like more people are focused on just getting those wins and they don't care about having those big stops. But some people want to keep them really tight. So it's just really up to preference how you want to do it.
Okay.
Yeah.
Okay.
But yeah. So this is just another confirmation that you could use if you want to be a little more careful. But obviously you can see here, if you were too careful for this trade, you probably would have missed out on this win right here. If you were using that structure, or you could have waited for this one too. So say if you avoided this one right here, like say this was at the resistance, so you don't want to take it. You could have just waited for this one right here, and you still would have had that win regardless.
Okay.
Yeah.
Okay.
So that's something to just keep in mind when you're using the intraday strategy. But I think once you get the scalping strategy down, you're probably not going to look at the intraday strategy anymore, honestly, because especially with your schedule, since you seem like you work. So if you're working, the scalping might be better, since you don't have to be on the chart all the time. You can just like sit down for a couple hours, take some scalps, and then go on with your day pretty much.
And I think that definitely will help me, because sometimes my schedule is tight and sometimes I got time. But one thing I do realize, and I appreciate you helping me on trying to figure out why my signals weren't coming in. I think I got to delete some of my alerts, because my alerts go off all the time, but when I go to the chart, I don't see nothing. So I don't know if it's because I did I had the Haganishi, whatever the candles called, Hakanashi or whatever.
Oh yeah, you had those other ones. You probably, because if you had those candles on at the time, so say if you had those candles on, and then let me just take this off. If you had those candles on and then you were setting the alerts with these candles on, then it's only going to give you the alerts with these candles. So that's probably why you never get any alerts. You'd have to reset them with normal candles.
Yeah, because I get alerts all the time, but when I go to the chart, it ain't nothing there.
Oh, there's nothing there. Okay, yeah. So that's probably the issue. It's probably giving the alerts off the Haikishi candles, and then you're on the normal candles, so you don't see anything on the chart.
Somebody take that out. Cool. Appreciate that.
Yeah. Yeah. All right. Cool. So do you want to go over another one, or do you just want to get over to the scalps?
I don't want to waste your time. I mean, if you can, that's great. I know I definitely want to get to the scalps.
Yeah, no, definitely. We'll get to the scalps, but if you want to cover another one, we can do another one as well. There's no rush.
I haven't seen a lot of people in the group do any like cryptos. Is crypto still work on this or not really?
For this one, the intraday strategy, not so much, because cryptos don't really trend as much. They kind of go back and forth. They're like speculative with their moves.
So maybe like a GJ if we got time. Man.
Yeah, definitely. So we'll pull a GJ real quick. So it does work with GJ. I know that because I actually use this myself. So like for right here, there's a perfect entry right there if you were to catch this one. So like we have the perfect entry off this, where it you have the buy signal and then the trend meter is green. And then we can possibly take a look at the K2SR. So there's like no zone up there. So you could be perfectly fine to take this trade. So if you were to zoom out, enter a long position right here, this would be about for like 58 pips. And it looks like it goes straight to TP right there. So that's a pretty smooth move right there. If you were to, apply this.
And with the SRs, you're drawing the box on the two red lines, right? If I saw that correct.
Yeah, I mean, you could color whatever you like, but for me, I just use red. So I use a rectangle tool. Okay. And then normally this is what it would look like. So you probably don't have these extended lines. Normally it looks like this if you just draw your rectangle. But in order to get it across the screen, you just go to settings, click on extend right, and click on extend left. And then this way, the cool thing about this when you extend it all the way is you can set up your zones, and then you can pull back to see like how strong these zones actually are, because you can see how they've been tested in the past. Because usually for Forex pairs, there's so much data, because Forex has been around for so long that you can pull back and you can see like the last time it was tested. I don't think it's ever been this high before, but Yeah, actually, the last time it was in the same area where GJ currently is right now was back in let's see, February of last year. So like the same exact time last year, February 20th, it was in the same exact zoned area. So it definitely helps if you want to have those extend left and extend rights on. But just looking at over here, this is pretty much how I would draw them. I would just use a red rectangle, but you can change it to any color you like. It's just whatever by preference. Because I've seen some people use blue, some people use green. I mean, like whatever works for you for the most part.
So if you saw a buy signal, but it looked like it was heading towards, let's say, a support, then you'd be like, okay, I'm feeling pretty confident about that. It should ride back up. But if it's
Oh
heading
yeah,
support, then it's like, nah, that's not gonna work.
yeah, exactly, yeah, definitely. Because the way that these structures work is that they just identify where the rejection points are. Because basically, in order for these zones to get created, let me just turn this off real quick. In order for these zones to get created, the same price point has to be tested at another point. Like for example, here we have it tested right here at 145.069, and then it's tested again right over here, same exact price point. So like, normally when people have zones, they have more, they're kind of close by, like they're kind of testing, like it doesn't have to go to that same exact price, but it gets somewhere near it. That's usually where people will put their support resistance. But for this indicator, the way that I developed this algorithm is that I only have zones created whenever price reaches an exact price point. So it has to go to exactly 145.069 in order for there to be a resistance. The reason I did this is because I was trying to figure out where the bank algorithms are trading. Because the bank algorithms, they have them set at a specific price point. Like when it gets to a certain price point, the banks just automatically sell or automatically buy. So I was trying to figure out, where are they trading at, so that I can know where not to trade. Because you don't want to get in the way of the banks, right? The banks are going to push price wherever they want it to go, and if you get in their way, you're probably going to get stopped out. Okay. So that's how this indicator was created.
All right, cool. Yeah, because I've had some good days. I've had some terrible days. I'm just trying to get more consistent. That's my main thing. Definitely consistent.
Yeah, definitely. Like for me, I'm a careful trader. I'm a very conservative trader, so I don't really take risky trades. So like how I mentioned, you can just ignore the zones if you wanted to. I personally always take them into consideration because I want, like, I'm more focused on having a high win rate and just stacking up these wins, even if they're smaller wins. If they're not those big home run wins, that's fine, because these small wins here and there will add up. So I'm more focused on stacking up these wins rather than going for like 100 pips and then losing like 10 times after that before having another win.
I got you. Yeah.
Yeah. All right, cool. So let's see. So was there another trade that you wanted to look at on GJ, or did you just want to look through it?
It was just kind of looking at one now, really seeing those supports and resistance areas. That's probably why I got jammed up. But I would also think another issue that I saw the most is just to zoom out. Because I feel like my long position or my short positions were just so tight that I would look at it and it'll do exactly what it said it was going to do. But then I'd be like, I'm stopped out already.
Yeah. No, that's usually a thing. Like that's why for me, I'm more focused on being accurate, with my stop losses, because I've seen a lot of people where they try to do like the 1 to 3 thing. Like a lot of people don't like 1 to 1. They try to do like 1 to 3 where they have their stop loss super tight right here and they try to shoot for like those home runs like that. And in reality, that doesn't really work. If you're using a strategy like that, you're going to lose like 10 times before you hit one, because it'll hit stop loss so many times before it actually plays through. So like for me, I like to have a pretty wide range between stop loss and TP, because I already know where price is going to go. The stop loss is just there for a protective, just so I don't get kicked out too early. Because I'm sure it's happened to you before where like you put your stop loss a little tight. Like, let me see if I can find, for example, here. Like this one right here. So like, for example, right here, if you were to take this trade, this is a valid trade right here. If you were to take this trade right here and you put your stop loss too close, like right here, you put your stop loss at the swing, which should be somewhere around here, about 17 pips. If you were to do that and have it too close, you probably would have gone stopped out before it ended up.
Yeah.
It like literally just went stop loss and then it goes straight up to your TP. So like, for example, that's if you would use the put your stop loss at the swing. If you did it the other way where you zoomed out, so if I zoom out from this point and then I use the long tool, you got way more space right there. So if you did that, it would go into some drawdown, but eventually straight to TP right there.
Don't mind drawdown as long as it don't stay down.
Exactly. Yeah. Exactly. It's a mind game, you know, because what happens is, like I don't know exactly what was happening around this time during the market, but generally, if the institutions and market makers know that a lot of people are taking buys right here, they know where people put their stop losses, right? Because everyone puts their stop losses in the same place. The stop losses are generally placed at the previous swing. So like basically, if you were to enter this trade right here, I'll zoom out from here. Yeah, if you were to enter this trade right here, the swing would have been like this whole area. So this would be like a whole area of stop losses. That's kind of like where you have to think as well. Like whenever you take a trade, you want to know where other people are putting their stop losses. Generally, they put them at this swing right here, and then they'll probably have stop losses over here. And you want to make sure that your stop loss isn't where everyone's stop losses are. Because if your stop loss is where everyone else's are, what happens is they spike price down. Like they'll spike it to here, and then they'll swing it up a little bit, and then they spike it down a little bit more to stop the rest of the people out, and then they shoot all the way back up where it was supposed to go, because they're just manipulating price. Like for example here, you can see it comes down to this point where it would stop people out from this swing. So that's their first stop out. They stop people out in that first level, and then what happens is people get stopped out, and then they re-enter, right? I'm sure you've been in that position where you get stopped out and you're like, nah, that was a fluke. You know, I'm gonna go back into the trade. As soon as you go back into the trade, they spike right back down to that next level where everyone has their stop losses at. So you watch this right here, comes down to stop people out down here again. And then as soon as you know it, it goes straight up to where it was supposed to go, right? It does that all the time. It's you got to understand how the market makers and institutions play this game, because you can't keep falling for the traps, because they know where people are putting their stop losses. And you know, you can see it was here perfect. It went to that first level, second level, and then it did what it was supposed to do.
Okay.
Yeah. I mean, it's something that you'll pick up over time. You know, I've been trading for like 11 years now. So I've ran through the same situation like time and time again, where I'm able to identify where, you know, like what they do in the market to stop like out new traders and stuff.
Yeah, because I think, like I said, I only got into trading probably, it's been about like a year, year and a half. And it just seems like certain things, I started off with IML.
Yeah.
Then I was like, man, it's too much going on. I just want to be consistent. And then I kind of went on, you know, different places, and I kind of seen, I was like, okay, I kind of like this format. I was like, all right, I'll invest in it, because I was like, I feel a little bit better about it.
Yeah, definitely. Yeah, no, definitely. And you know, it's a lot better when you actually understand what you're doing. Because I know we have a lot of people in the group that came from IML, and they didn't really trade, and they wanted to learn how to actually trade. So when they came over to K2, they were like, wow, this is what I came for. You know, like this is what I really wanted to learn. And now everyone's killing it. It's crazy.
Yeah, I just trying, like I said, try to get my consistent, because what I gained last week is what I lost today. Like I said, I mean, compared to what y'all doing, it's like I gained, like I was up like four something last week, $400. But then Friday, I think I got too emotional in the trade, because US 30 came back down, and I should have took it with the profit that I had, and then it just spiked up right before 4 o'clock. And when it spiked up, I took a couple losses. I took like $100 loss, and then today I took like a $300 loss. I said, all right, let me slow my tail down and get this jump back without being too aggressive with it.
Yeah, exactly. And like for me personally, I usually don't even trade on Fridays, because Friday is a risky day, because you have a lot of speculation where people are trying to get out of the market right before market close. And then what happens is people, like if I go to US 30 real quick, you can see that it kind of set up like for a pattern on, I think what was Friday, it was like 11, no, it wasn't 11. Or actually it was like the 14th. Yeah, right here. So on the 12th. So basically what happened was it moves in like two impulses. This is generally how the market moves. Like market opened right here at about, let's see, 6:30. Yeah, so the market moved in like two impulses where it shot up a little bit. And then what happened was once we get closer to the market close, people started to sell off because everyone's trying to get out of the market before the market closed. So around here, it started dropping a little bit. And then around lunchtime, my time, it's around noon, my time. I think it's 3 o'clock your time, like you just mentioned. That's when people started to buy the dip, and then it just shot up. So it's really it's psychological. You kind of have to think how other people are thinking when they're trading, and you kind of got to do the opposite. Because I'm sure if you saw this, like when you saw that drop or when you started to take that drop, I mean, it looked like it was going to drop, obviously, because price is trending down at that point.
It looked like a perfect drop. I mean,
Exactly, because it was dropping for a cool minute right here, and I'm sure that this is why you're like, okay, it's going to drop because it keeps going lower and lower. But then when you least expect it, it just breaks all the way up. So usually I don't like to trade on Fridays because a lot of manipulation happens like this. Because this was a crazy push up. Like when I saw this push up at the end of the day, I was like, good thing I wasn't trading because I know I took a scalp right here and I made a small profit. Well, not a small profit, but I made a pretty decent profit because I went for 300 pips, but I was taking like a 2 lot. So I actually made like $600 off this trade. And then luckily I got out because if I didn't get out, I would have gone stopped out because it shot up so quick within those last 60 minutes from market close.
that John had me pissed.
Yeah, because basically when you're trading on Friday, I would cut off trading like by 9 o'clock because at that point that's when the market starts to get manipulated because people are trying to get in and out. And then if people see opportunity, they'll take it and they'll buy the dip right here. Because obviously it was testing support for like a cool minute that entire day from like midnight up until market close.
Okay.
So yeah, it's something that you'll pick up over time. I mean, it's all repetition and practice. Once you start to look at the charts like every day and it just becomes repetitive, you'll start to see these patterns, and it does the same thing every day.
Okay.
All right, cool. So let's see, what should we go over next? Do you want to go over some more GJ trades, or do you just want to go over the scalp strategy?
We go to scout.
Okay, perfect. So what I'll do first is I'll put the requirements up here. So this is the K² snipe strategy for US 30 on the 10-minute time frame. So the first requirement is to confirm a wick rejection off K² pivot, which could be any pivot. Second one is confirm wick rejection off K² SR zone. And lastly, you just want to confirm wick rejection off pivot, not touch candle body. So that's pretty much it. Once you have that, you can enter on the open of following candle. And then lastly, we use a fixed stop loss TP for US 30. And this is only for US 30, which would be a 500 pip stop loss TP. So that's pretty much it. We can go backwards and just see if there's, or did you see any entries that you were confused about that you kind of want to go over, or do you just want to go over the strategy in general?
Probably go over the strategy because sometimes when I looked at it, I'd be like, okay, that looks, I don't know. I'm not sure. So,
yeah, if there's something specific that you see as we go over this, just stop me and let me know, and I can analyze it for you, and I can let you know, if I would have taken that trade or if I wouldn't have. But I'll go ahead and let me just copy this, delete everything off the chart. So from what I'm seeing right here, I think the first entry would have been right here. So I'm gonna just draw a zone right here, and you can see that the zone's right here, right? You can see it on my screen. Yeah, we got this red zone right here. So I'm gonna go ahead and just actually we have one down here too. So I'll mark this one up right here, and then I'll mark that one up as well, and then we'll go over it. So just looking at this here, I'm gonna hide the K² SRs because I've already drawn the zones. So the first entry that I see is actually right over here. So just looking at these requirements, first you want to confirm a wick rejection off the K² pivot, and I'll just mark this up right here. You can see from this point, we have this nice wick right here. It rejects off this green and yellow pivot, which is level 1, level 2. Usually you'll go for the one that rejects off the farthest. So in this case, the yellow one's the farthest one out, and we'll only be focusing on that one. So in order to focus on that one, I'll just turn off the rest of the pivots. So you can see right there, it's a clean rejection, right?
Right.
Off the yellow pivot. So first requirement is confirm wick rejection off the pivot, which would be any pivot. But obviously, the farthest pivot on this chart would be the strongest one because it goes from level 1 to level 4, and that will indicate how strong the pivot is from 1 to 4. Green would be 1. So yeah, level 1 would be green, level 2 would be yellow, level 3 would be orange, and level 4 would be red. So for right here, we have this wick rejection off this yellow pivot. We have the wick rejection off the K² SR zone, which would be this area right here. And then you just want to make sure that the wick rejection off the pivot doesn't touch the candle body. So right here, this yellow pivot is so far from the candle body, there's like no there's no confusion there, right? It rejects off the pivot, but not the body. So once you have all those three requirements down, you have the wick rejection off the pivot, you have the wick rejection off the K2SR zone, and you confirm that the wick doesn't touch the body, you can enter on the open of the falling candle. So as soon as this candle right here closes, you can enter a short position right there, and then you'll set your TP stop loss to 50 points, which are equivalent to 50 pips. So these numbers right here are points, since we're looking at the actual future data, but this would technically be 500 pips. So once you have that set up right there, you just let it run, and there you go, straight to full TP with like no drawdown, literally. You go straight down from that point. And then you can see that you hit TP within 20 minutes. So in 20 minutes, you would have locked in 500 pips. If you were trading like a mini lot, that'd be $500 in profit. If you're trading standard lot, that'd be $5,000 in profit. And then if you're trading like the smallest lot size of 0.01, that'd be $50 in profit. So, I mean, it's pretty easy. It's not that difficult, but that's just one example there. Next up, we'll look at this next example right here as we move a little farther back. So this is the first one right here. I don't see anything else from here up until here, but from this point, this would be the next entry. So I'll just replay it back to here as well so we can look at that.
You said which one will be the next entry?
This one right over here, this red one.
Okay.
So let me just mark this up right here. So same thing again, we're looking for the same thing. We're just confirming a wick rejection off the K2 pivot, which would be any pivot, which would be this red one. So you can see this red candle right here has a nice wick that cuts right through this red one. So that'd be the first requirement. The first requirement is a wick rejection. The second requirement is a wick rejection off the K2SR zone, which would be this zone right here. So those two requirements are met. Third requirement is just you want to make sure that the pivot doesn't touch the body, the one that it rejects off. So the red pivot's like way up here and the body's way down here. So that qualifies as well. Once those are all met, you can enter on the open of the falling candle, which would be the same thing. So for example, right here, and this is one, let me show you this as well. So this is one thing that a lot of people get confused about. If they see these, a wick rejection off this pivot and a wick rejection off this pivot, they get confused. They think that, you know, this might be a buy and this might be a sell. But like I mentioned before, you know, if you find this requirement up here, you just ignore the other ones. So if I take those off, it takes away the confusion right there, because all you see is the red pivot. But like once you have that set up, you can take your short position again, like we did earlier. Take a sell right there. Same thing, 500 pips both ways. You let that run from that point and then straight to TP right there with no drawdown at all. So do you get what I'm saying, or is there still some confusion? So
I think I'm getting it because I see the rejection off the pivot. See, me, I guess my biggest concern was like which pivot would I be watching the most? And I can understand a little bit more about why you said that should be more of a sell because of where the zone was. Is that correct?
Exactly. Yeah, because there's no zone down here. So even though it's rejecting off the pivot, it wouldn't fill the second requirement. So there's no zone down there. And you know, obviously you wouldn't be looking for a sell there. You don't be looking. I mean, there'd be a sell there. You wouldn't be looking for a buy, because you would need both of the requirements in order for it to be an entry.
Okay.
Yeah. So I think that's the next one from there. I think the next one up would be this one right here, actually. So I'll just go ahead and rewind that to this area over here. Unless, do you see anything else on the screen that looks like an entry to you? Because if you see something that's kind of confusing, we can take a look, but I'm not sure if you see anything on the screen.
Now, like the last candle is bouncing off the zone, but because the pivot is above it, it would not be valid, right?
Which one was that? This one over here?
The last green one?
Oh, this one right here, right? That's correct. So for this one right here, there'd be no entry because the zone rejection would have to be above it as well.
Okay.
So it'd have to match up. We'd have to have a wick rejection off the pivot and a wick rejection off the zone as well.
Okay.
Yeah. So this one would be an entry, but this one would be the entry and the one over here. So the next one that I see on my screen would be this one right here, actually. So again, right here, we have the same requirements. We have the wick rejection off the pivot and wick rejection off the K2SR zone right here. So this is one that would be a little risky. The reason for that is because the market just opened right here at 6:30,
Okay. Okay.
and you can see that just looking at this specific candle or the candles right next to it, they all have like huge wicks, right? So you see that price is indecisive here because price just keeps getting manipulated. It gets shot down, and it shoots back up, it shoots back down, and it shoots back up. So for this right here, I probably wouldn't have taken this one, but if you wanted to take it, like if you were feeling risky, I mean, you could have taken it. It just would be considered a risky position because generally I like to wait like at least an hour after the market opens. So 6:30 here. I usually don't trade an hour before or an hour after because you can see here that, these are normal candle movements right here. It's just normal smooth movements, not too many big wicks. And then you go to market open right here and there's huge wicks back and forth. Even like right before market open right here at 6 o'clock my time, 9 o'clock your time. Yeah, there's a huge wick right here and it just kind of consolidates a bit and then a bunch of movements here. But if you were to take this trade, you could enter a short position right there because all the requirements are met. So the first requirement is the wick rejection off the pivot, which would be this green pivot right here. The second requirement would be this wick rejection off the K2SR zone, which would be right here as well. And the third requirement is you just want to make sure that the pivot doesn't touch the body. So the green pivot's way up here and the body's down here, so you're pretty much good to go. Once you have this lined up right here, you just do the same thing we mentioned, 500 pips. And then if you let it run, it hits full TP right there. So you can see that it was a risky trade, but it still hit TP. Like if you have your TP set in the proper place where it's supposed to be set, I mean, you should be pretty fine because it moves so fast where you can just catch that win and then you get out because if you don't set your TP right away, the horrible thing could happen right here and it goes straight to that stop loss. So like the thing with scalps is you got to be really on point and you got to be really quick because some people they'll enter a trade and then they won't set their TP or stop loss because they want to be greedy. Some people are like, I'll put no TP and I'll just trail it. But by the time they try to trail it, it's already reversed in like the next 10 minutes. So you got to be on point with it. That with your TP stop loss. Like once you enter the trade, put your TP stop loss. I don't recommend being greedy and trying to catch like a bigger move because I've seen that happen to a lot of people where they had a bunch of wins, but they never put a TP because they were like, oh, I'm just going to ride this down and just trail it with the stop loss. They end up getting stopped out.
Okay. Okay.
So this is pretty much, I mean, that's pretty much it. The strategy right there. It's super simple. And if we just run it forward, you can see again right here, another entry right there, the one that we just marked up, full TP. And another one again right here off this one for another full TP. So it's pretty simple. Let me see if there's another entry over here that we could possibly look at, before we move forward. I'm not sure if this is the only one that you want to trade or if you wanted to see the strategy on like other assets because you mentioned cryptos earlier and this works on crypto. So I don't know if you want to take a look at that as well. We can take a look at that.
Yeah, if we have time, that'd be good because I know before I was scared as can be on US 30. So I was doing SPX and I was doing nines, and then I just like, man, I'm not confident enough, and I just stopped.
Yeah. Indices they're not something to play around with. If you don't know how to trade them, you should just stay away from them because I've seen a lot of people blow money off indices because they think they know it, but they just get tossed around easy off these assets.
Now, is there any time frames you like doing this strategy on the best in regards to like sessions?
Well, 10 minutes the best for me. For scalping, I find that 10 minutes to be the best because it gives you the best of both worlds, basically. It gives you a lower time frame, but it also gives you accuracy because it's not as low as like the 5 minute or the 1 minute. I've seen some people do it on the 1 minute and do well, but it just moves way too fast, especially for something like US 30. This isn't an asset that moves like Forex, where it moves like it barely moves at all. Like for US 30, you could be in and out of the trade within a few minutes, few seconds. Just really depends on how it's moving at the time and depending on when you trade it. So like you mentioned sessions, I found US 30 to be good all day long. Like a lot of people just trade during New York session. I used to only trade during New York session, but then I started trading it throughout the day and it works perfectly throughout Asia session and London session as well. So it just really depends how you want to look at it.
I didn't know if you noticed any type of trend where it's not as much manipulation through the sessions. So I used to trade some at night, but it just seemed like I think my strategy was jacked up anyway, but I was just trying to find something that's kind of fit. So like, okay, if I'm working a lot during the day, maybe I can trade at night during the Asian session, something like that. I was getting up for the London session, but it was just tearing me up on my sleep habits. Trying to get up that early, then trying to get back and catch the New York session. I was a hot mess.
Yeah, and I'm the same boat, man. Like I've tried to do London session because people love London session, and it honestly it's the best session to trade because it's the fastest. But you know, I value my sleep, I value my rest, so I just I'll just get up for a New York session, and I'll just ignore the London session. But I mean, if I really wanted to, I could stay up in London and trade it, but it really messes up my sleeping pattern. It's just not really worth it, you know, long term wise.
I got you.
Yeah, so the 10-minute would be the best for me, but I've seen people use it on every time frame. I've seen people use it on the 30-minute. I've seen people use it on the 4 hour. I've seen people use it on the 15-minute, the 1 minute, the 5 minute, and it works perfectly fine. So it's just really up to you how you want to trade it. Obviously, on the 1 minute and 5 minute, you'll have less accuracy because there's a lot more noise on those time frames. And I find the 10-minute to be just the perfect sweet spot. So it just depends on how you want to trade it, but it doesn't really matter. You can trade it on any time frame, really.
Yeah, if y'all stuck to 10, I'm sticking on 10.
Yeah, the only difference with the other ones is you'll just have like if you're going on the shorter time frame, lower than the 10, your TP stop loss is probably not going to be 50. It's probably going to be less than that. So if you go on the 5 minute, it'll probably be like 25, 250 pips instead of the 500. You just cut that in half. And if you're trading on the 1 minute, your TP would probably be about 100 pips because you know it moves a lot faster. Well, not faster, but it moves like a lot quicker on your chart if you're looking at those short time frames versus the 10. Yeah. So do you want to keep looking at US 30? Is there something else you want to look at?
If we can look at another example on US 30 and then maybe a crypto example.
Yeah, definitely. So let me see this right here. So we actually got another zone right here. Let me see if I could find it. Well, I think this whole area is a zoned area. So I'll just mark up this whole area right here. Sometimes when this happens, when they're all like crossing over like this, I usually just put one big zone. Like if they cross over, because like this zone right here crosses over with this one, instead of just having like three different like small zones right here, which I mean you can if you really wanted to, you can do like really small zones, but it just doesn't make sense because they're so close to each other. Instead of drawing three zones right there, I just draw one big zone.
Okay.
So I'll just connect this zone with this one up here, and then I'll turn off the K2SR indicator. And then it looks like the next entry would have been right here, right above it. And I'll show you another example after this for a buy, because this works both ways. It's not just for sales. But yeah, so from right here, this is the entry off this red candle. So we have the wick rejection off this yellow pivot. We have the wick rejection off this K2SR zone. And then we just confirm that this yellow pivot doesn't touch the body. So it doesn't touch the body there. All the requirements are met. We enter a short position right here. Same parameters, 500 pips. And with that said, we let it run and it goes straight to TP within like 20 minutes.
Okay, even though it's still in the zone itself, because it was going towards the top of the zone and it wicked down, and because it hit the pivot, we could still go in for that trade.
Exactly, 100%. So the zone rejection is just a secondary confirmation. The more important rejection is the pivot rejection. And you just want to make sure that it's just rejecting off the actual zone. Like it doesn't have to be out of the zone. It can still be rejecting and be within the zone. You just want to see that wick pushing off the zone right there, because it's going to indicate that, you know, price is trying to push right off it. Because we're just looking at these zones as like a bumper. So basically, you know, for example, here you can see the previous candle right before it. It was a green candle, right? So like for example here, if I replay this, you can see that price was below, and then what happened was it came up and then rejected off the pivot and the structure. So this candle right here was a green candle, it was pushing up. The next candle was a green candle as well, it was still pushing up. But this red candle right here indicated that price was it bounced off this bumper right here, which would be the zone and the pivot. So once you see that, you can pretty much anticipate that price is probably going to continue pushing down further. So that's the whole thought process of the strategy. Like a lot of people don't realize that these wicks are just giving you hints. Like they're giving you hints that price is trying to push up there, but then it rejected off. Like a lot of people don't realize that these wicks mean that price was actually above there at one point, but then when the candle closed, it pushed back down. And then this is the footprint of where price was previous to that. So I'm not sure, I'm sure you knew what that meant, right? Or is this new to you? Okay, perfect. Yeah, because a lot of people don't realize that when the wicks are created, that actually means that, like, you know, the few candles before that, price was actually in this area, but then it rejected right off it. So that'd be an entry right there. Let me see if I can find a buy here that, let's see. Okay, so here's an example of a buy. So let me just replay this over here. So we're doing the same thing, just in the opposite direction. So right here, we confirm the wick rejection off the pivot, where this candle rejected off that green pivot. The second requirement is that we confirm the wick rejection off the K2SR zone, which would be this one. And this is what I was mentioning before. The price doesn't have to close outside of the zone. It just needs to reject off the zone. So right here, we have the first requirement where it rejects off this zone. We have the second requirement where it rejects off this, the first requirement where it rejects off the pivot. The second requirement where it rejects off this zone right here. And then the third requirement, we just confirm that this pivot doesn't touch the body. So the body's way up here, pivot's down here, perfectly good to go. Once that's all set up, you set up your long position right here. And then you just set it to 500 pips like we discussed earlier. And then you let it run. And there you go, straight to TP with no drawdown. It was in profit the entire time. And that's why we call it the snipe strategy, because it's so accurate where it doesn't go back into drawdown. It literally just, shoots straight to TP. So that's one right there. There's another one right next to it, actually, right here. So for right here, there's actually two entries. There's this red one and this green one. The same requirements: rejection off the pivot, rejection off the structure. Once those two are met, you just confirm that the pivot doesn't touch the body. So it's rejecting off the screen pivot. The body's way up here. It's pretty much good to go. So once you got that set up, you put your long position right there. Same thing, 500 pips. You let it run, and there you go, straight to full TP within about 20 minutes, 20 to 30 minutes. So you can see it's pretty simple. It's it's really not that hard, and it's easy to spot. The only thing is you just got to be really focused, because if you miss the move, well, I mean, for example here, if you miss the move on this first candle, it's fine because you would have a second opportunity right here, but that doesn't always happen. Like for example, over here, it's just one opportunity. If you miss that opportunity, you're pretty much, you missed the trade, right? But sometimes you'll get double opportunities like this, where it'll come down and then it'll just consolidate a little bit before it actually shoots up. But you just got to be really on point. Scalping is it's all about focus. Like if you're able to focus, just zone everything out. Like I'm sure you've seen me on the live streams. I don't even when I see a scalp, I'm like focused on it. I see it, I take it, and I don't even think twice about it. I just take it and I'm like, all right, if it hits, it hits. If it doesn't, it doesn't. So that's pretty much it for this. Do you want to see any more for US 30, or do you want to move over to cryptos?
Maybe one more if we got time. I don't
know.
Yeah, no, I don't know. I was trying to get my other monitor up just so I could see in regards to if anything looks like it now, but I didn't really see anything because of how my screen set up right now.
Gotcha. It's all good. So let me just send this update real quick. Our USD CAD position just hit TP2, 20 pips. Nice. Man, it's funny. One of the members messaged me. He was like, he saw this going to drawdown, like 10 pips, and he got scared, so he closed it out. I was like, bro, why did you close it out? And he was like, he said he's been up for the week, so he was scared that this was going to hit stop loss. But, it's all about patience. Hit TP right there. So
do you prefer to do it on the 4-hour or when you're on Forex?
For Forex, it's hard because it's hard for me to call signals when it's scalping because it moves too fast. So for the signals, I call them on the 4-hour. If I could do them fast enough to just call the scalps, I would just call scalps because they just hit faster and they're more accurate. But since I'm calling signals, it's kind of hard for people to catch the trades if they're not on the screen at all times, right? Because when you see a scalp, you got to take that trade right away. If you miss the trade, you pretty much miss the entire move. So for Forex, I prefer the 4-hour because it's pretty accurate. I mean, all my signals have been pretty on point for Forex. But obviously I'm a scalper. It depends on your trading, your trading personality. Like for me, I've always been a scalper. The only reason I went to the 4-hour is because I wanted more free time. I didn't want to be on my screen all day. But you can see how lucrative this scalping strategy is. So it's like it's a no-brainer for me to just suck it up and just like stick on the charts for like a couple hours to catch these scalps, rather than hold these swing trades or intraday trades for like hours, if not days. Because there was like a couple trades we took last year, and man, those trades ran for like weeks, bro. And I was just like, man, I wanted to get out of the trade so bad. And I was like, it made me want to go back to scalping like that instant. And I was like, all right, I'm just going to keep doing this, but I'm also going to do scalping on the side. So I still take these trades, but I just let them run. I don't really play around with them. Like I don't really adjust the stop loss anymore. I just let them run to full TP, and then I make my money scalping. So it's like, if I lose my intraday trades, it's cool because I already made it up from scalping.
I got what you're saying.
And then it's just a balance, you know? It's a balance that goes back and forth. All right, so let's go over. You said you wanted one more US 30, so let me see if I can find another one over here. Let's go to like a random area, so we don't just, we're not just focused on that one, this one area, because it works like all the time. So we just go over, we'll just rewind to a random place like over here. So this rewinded back to February 8th, so it's about a week ago. Let me see if I can find some entries here. So let's see if I got any right here. All right, so this might be a good example right here because it's such a big zone. I feel like a lot of people get caught up with these little zoned areas, or they get confused because price is within the zone. So I'll go ahead and back up to right here. Let's see where the first entry is. First entry is, I can actually go over all of these because there's a bunch of entries right here. So if I go back to here, here's the, there we go. All right, so the first entry would have been right here, where this rejected off the pivot and the structure. So there's actually two entries right next to each other. There's one right here, and then there's one right here. You see both of these right here? So there's one green one right there, and then there's another green one right here. So if you took this first one right here, I think this would have hit TP. Let me just check real quick. Or it would have been on its way. So we'll just we'll draw it from this one first.
With that one being in the zone, I know it's getting the pivot from the bottom.
Mm-hmm.
Would that throw it off because it didn't technically, it wicked off the pivot, but didn't kind of go to the top of the zone?
No, so this would be perfectly fine because you're just looking for wick rejection off the zone. It doesn't have to be out of the zone or in the zone. It's just any type of rejection within the zone, because like this is just giving you a little storyline that prices, it's rejecting off this point, so odds are it's probably going to shoot up higher. Okay. From the little wick, because you can see that the wick is bigger on the bottom, so you can kind of see that it's like a power struggle. That's the way I see it. If you see a wick where something like this, so this is an example of where you would skip it. So let me just go back to this. I'll go back to this one right now, but I'm gonna show you this because this is a confusing one for a lot of people. This is actually an entry in both directions. So there's a wick rejection above it off the pivot, and it's rejecting off the structure. And then if you look below, there's also wick rejection on the bottom for this green pivot and the structure as well. Do you see that right there?
Yeah, I see it.
So if you see this, just skip it. Don't even bother trying to trade this, because this is like uncertainty in the market, because it has a rejection on both points, and you don't really know if it's going to be going up or it's going to be going down. Like some people like to take a gamble and they just take the trade anyways. But for me, like I mentioned, I'm a conservative trader. I'm focused more on winning trades rather than taking risks and getting lucky. So if I was to see this is a complete skip. I would just skip this trade. So let's just go back to the one that we were looking at earlier. Right over here. So like I was saying right here, so even though it's inside the zone, this would be perfectly fine, because like I mentioned earlier, the zone is just a secondary confirmation. The main confirmation would be the pivot rejection. So we got the rejection up here. The second confirmation is just it's just the zone, because basically these are like two strategies that are combined. So I don't know if you saw the video originally for the pivot strategy. We have one that was originally for this, but we use the momentum indicator as well. Did you get a chance to look at that video?
I think I did see that.
Yeah, so that's the original one. That strategy still works perfectly fine. The only problem with that strategy is that it's too it gives you a laggy entry. Like it give you, like you'd have an entry, but then the move probably already happened at that point. Because usually, like, in order for us to get momentum, like for example here, for us to get a momentum signal, there's usually a push before it to confirm that the momentum is actually pushing up before you get that signal. So basically for this strategy right here, we're just catching it right off the rejection instead of waiting for the actual momentum. But just looking at this here, you know, like you mentioned earlier, you're kind of confirming whether this would indicate if this is a full rejection off the zone. And this is perfectly fine because the main rejection would be the pivot rejection. That'd be the strategy number one. And then the second strategy that confirms this would be a rejection off the zone. And the way that that strategy works, so for example, I would use this. I'll just take the pivots off, or here, let's do this. The first requirement would be the pivot rejection, right? So this would be one rejection here. This would be considered the first strategy. The strategy that we combined this with was the zone rejection. So it's kind of like a break and retest. So like if you look at this here, you see price break into the structure, comes back down, and then rejects off the structure right here. So you kind of see like how the thought process works here. It's basically two strategies that are combined into one to give you a double confirmation.
Okay.
Okay, so like for right here, if you were to take this trade, same situation again, you know, you enter a long position right here. There's actually two entries right here, I think, or no, actually, let me rewind to this one right here. Yeah, so if you saw this right here, like when it closed, it was actually an entry because the pivot was rejected off the pivot and it rejected off the structure as well. And the pivot didn't touch the body. The only reason the pivot touched the body over here is because price already moved farther down. And then that's why it looks different. So right here, you wouldn't have spotted this, but if you were looking at it real time, it was actually a solid entry right there.
Okay.
So for this right here, let's see. Yeah, this would have been an entry right here if you took this for 500 pips. And then the one next to it would be an entry as well, this one right here. Right over here. All right, yeah, so if you were to let these run right here, these, I mean, they both obviously hit full TP. This one hits full TP. The one next to it right here hits full TP. And then there's actually another one right next to it. This one right here off this. There's actually 4 entries. So if you missed this first one, you could have caught the second one. If you missed the second one, you could have caught this third one. If you missed the third one, you could have caught this fourth one. So there's a bunch of entries there if you're following it. There's actually 4 entries right there. You see what those entries are?
Yeah, I see them.
Yeah, so there's 1, 2, 3, 4. And you could have taken either one of these, and you know, either one would have hit full TP. So this one would have hit full TP, this one would have hit full TP, this one would have hit full TP, and same with this one. So you know, you multiply 500 by 4, you would have locked in 2,000 pips already right there within, you know, within like a 1 hour span. So like I was mentioning, if you don't have that much time and you can just catch these trades, you know, you can make a lot of profit off like a little bit of time. So that's one right there, and then there's another one down here as well. If you wanted to rewind over here, pretty much the same thing. We have the wick rejection off this pivot right here. Actually, there's 2 right here. This green one, the first green one, where it rejects off the yellow and orange. I mean the orange and red pivot, and then this other green one right here that rejects off this pivot and structure as well. So depending on which one you wanted to take, if you took the first one, I mean you would have been in profit already. But if you missed that one, you could have just taken the second one as well. So whether you took this one right here, full TP. If you took this one right here, it would have just taken a little more time, but eventually this would have hit full TP as well.
Okay.
So this is how everyone's making a ton of profit, because they're taking like a bunch of trades. Some people are riskier and they'll stack these trades up. Like they don't even think twice, and they'll just take all 4 of these trades sometimes. And that works sometimes. If you're comfortable with it, you can do that too. But I don't recommend stacking trades if you're, you know, if you're not too comfortable with it, because, I mean, this could end badly. You know, it could be a good 2,000 pips or it could be a bad 2,000 pips. It's really up to how the market's moving. One way to identify when market's moving good like this is when the pivots are really spread out and they're angling. Because if they're spread out and angling like this, it's going to indicate that the trend up is like super strong. Because you can see over here, it went from, you know, choppiness right here. This is where I wouldn't even trade when it's like this. If it's choppy going back and forth, I wouldn't even trade this. I would just hold off. I wait for it to split up like it did right here. The pivot started to split out and angle upwards. And then you see this first entry. That's a perfect one right there. I take that. And then as it continues moving up, you can see that the pivots just keep spreading out, right? The more spread out they are, the stronger the trend.
Okay.
So just looking at that there, you can see it's choppy right here. So you can see right here, super trending, right? It's trending up super nice. You can take all these buys right here, like for whatever entry comes up. As it starts to get choppy right here, I take a break. I'm like, all right, so market's too choppy. I'm not going to mess with it. breaks out again right here, starts to spread out. That's when it's time to start taking some more trades. So that's one thing to look at too. That's one thing that a lot of people run into an issue, because some people just get greedy. They see all these wins here and they're just like, oh, I want to keep stacking more and more trades. And they forget to realize that the market's not even moving smooth at that point.
Okay.
So I think that's it for US 30. Do you want to look at another one, or do you want to go to something else?
Let's go to some crypto.
Okay.
Crypto.
Cool. Is there a crypto that you like to look at, or you just want to look at something specific like Bitcoin?
Bitcoin is the one I've normally been doing, but I haven't really played around with any other ones.
Okay, cool. So we can just look at Bitcoin if that's the one that you normally look at. So looking at Bitcoin right here, let me see if there's any zones that we could possibly mark up. Let me see if there's any trades here. Let me see. I'm trying to see if I could find any entries here. So I think we're looking at this morning. So this morning, 16, I think there was a couple entries that some people were taking. So I think I saw one over here. Let me see if I could find it again. Yeah, so some people in the group were talking about this trade over here this morning. Let's replay it from this point. All right, so I'm going to rewind it to there. You'll see that we have a zone right over here. It's going to draw this up for you. I'm going to hide this. And yeah, just looking at this here, I mean, the market's kind of choppy, like I was mentioning before. You can see it's obviously choppy right here compared to how it was moving down here. Like this is smooth move down, kind of smooth move up. But then the market gets a little choppy here. So I probably wouldn't have taken this trade, but just looking at this example here, I'll just show you, what we'd be looking for. So like I mentioned, when the market's choppy like this, you get entries in both directions. Like for right here, if you were to take these buys, you probably would have lost this trade. Let me just mark this up right here. So there's entries right here, but it's just way too choppy. So I wouldn't have taken these trades, but if you were to take that trade, obviously this would be a loss. No strategy can be 100%. And one thing too with Bitcoin is I don't know what the range is because I don't trade it. So for a US 30, I know it's 500 pips, but for Bitcoin, I'm not sure what the range would be for this. Do you know what the range is if you scalp it at all?
Not really.
Yeah, I don't know either. So I'm assuming it'd probably be around. Let's look at a better example because these examples are kind of too choppy. I know some people took this trade right here, but like I mentioned, it's not something that I personally would take. I would have waited for it to smooth out. Like once it's down here, then I would take some trades because you can see it's going down. But over here, it's too choppy. Everything just keeps crossing over. So let's look for a better example where the market is actually moving pretty decent. All right, let me see if I see anything here. Let's see. Okay, so there's one right here actually. So let me just draw the zone so that we can pull it up. I think there was a zone. Like that. So I think this would be, this would be an entry right here. So I don't know if I would take, well, actually, no, this looks fine because it started spreading out already around this area right here. So you can see from this area, I don't know if you can see it on your screen if it's too blurry, but you can kind of see right here that, let me just hide this as well. So you can see here that it starts to spread out, right? The pivots.
Right.
So this is where I would trade. Looking back over here, this is where I probably wouldn't trade because it's too choppy right here. If I take the candles off the chart, you can see that, price is kind of all over the place right here. So comparing this area to this area right here, this is definitely a lot smoother than this area over here. So I probably would avoid this area, but then I would trade on this area right here. Turn this back on and turn this on as well. You can see that we have the rejection of the pivot off this candle right here. It's rejecting off this yellow pivot and it's rejecting off this structure. So with those two met right there, you would enter your short position. And then like I mentioned earlier, I don't know what the sweet spot is. So we'll just use the, generally if I'm trading something that I don't normally trade, I would put the stop loss either somewhere in the middle of the pivots. So right here it'd be about like 300 pips, I'm assuming, or I'd put it above it. So just depending on how you plan on trading. That'd probably be the sweet spot. I'll just round it off to like 300 pips. And then if you were to take this trade here, you let it run and it goes straight to TP right there. See if there's anything else over here as well. But yeah, I mean, this is pretty much how I would set these up right here. Let me see if we could find a better example again before we continue on. So that's one example there. I think there's another one right over here. Right there. All right, so for this, no, actually, this is fine. This green one right here. So if I scroll over here, you can see that we have the wick rejection off the pivot and the structure right here. So with this set over here, let's see this. So with this section over here, I mean, with this section right here, we have this candle rejecting off this green pivot and this yellow pivot. Since the yellow pivot's farther off, this would be the one we focus on. And then it's also rejecting off the structure as well. So with that said, we would take a long position right here. And yeah, I'm not sure to put the stop loss, but I guess we just use 300 as the sweet spot for now until, you know, you figure it out. But yeah, for example, here, if you take this trade, you let it run. Looks like you got really close to stop loss. You didn't necessarily trigger it. So maybe the stop loss is too tight at 300. Maybe it'd be closer to like maybe 400 or 500. But it's something that you'll figure out as you continue to trade it. Unless you want to ask in the group, you know, some people probably would know the sweet spot because they trade it more often. But I personally don't know where it would be. But if we were to put it at 500, or I guess, yeah, 500 pips, this is where it would be set up as. And then it eventually hits TP. But I mean, obviously it would take some time. I think this happened during the weekend as well, so it's kind of moving slow. But I mean, that's pretty much it. It's the same requirements, just on a different asset. And this works on everything. It's not just indices. It works on indices, cryptos, Forex, commodities like gold. It just really depends on what you want to trade it on.
Okay. Okay.
Let's see. So is there anything else that you want to see on here? I don't know if you want to see a different example or more examples. It's just really up to you, know, like whatever you're confused with. I want to like zone in on your questions.
Yeah, I think I would try to focus it more on like US 30. Now sometimes be throwing me off. Like I said, with the account size, sometimes I did SPX, but I'm pretty good if I need to go ahead and do it on US 30. It seems like US 30 trends a little bit better. But I'm wondering if I'm gonna try it, you know, at late night and stuff like that, versus of course not doing it in the market open. But just trying to isolate that, and then also I'm pretty solid about the US 30 daily open, but I guess on the time frame of the daily open, is the signal pretty close to, like, I'm noticing around about 10 o'clock. 10 o'clock my time would be like 7 o'clock your time, or will it, you know, kind of ignore it, even going a little bit further?
For the daily strategy, you can take any signal that's after the open. So you don't really have to worry about that too often, because the problem with the scalping strategy is that we're not looking for momentum, right? We're just looking for rejection. So applying the scalping strategy on market open is going to be totally different versus using the momentum indicator. Because like I mentioned before, the momentum signals only come after like there's some sort of confirmation. Like for example, here, if we were to get the sell signal, it usually rejects off some point, and then it pushes down a little bit before you get that signal. So if you're using the daily strategy, it's fine. You don't have to. The only thing that you want to avoid is the opening candle. So you don't want to take the 9:30 candle on your time. You want to take anything that's after that. So the time doesn't really matter for the daily strategy. The time only really matters for the pivots, because if there's manipulation in the market, you don't want to be catching, you know, the trade that's being, or the candle that's being manipulated. Because if you look back at data, the 6:30 candle is almost always manipulated. So if you go back to it, or like not just that candle, but just around the whole time period, like for example, right here, the one today, 6:30 was, let's see right here. Yeah, you can see that, I mean, you can't see it there, but you can see that the candles are moving kind of smooth, and then all of a sudden it starts to wick around 6:30. But for this one right here specifically, there's like other factors that come into play, obviously. Like you can take every signal if you want to. And like people have back tested it. Like if you take every single signal every day, it eventually ends up in profit. But for me, like I mentioned, I like to be conservative. So I look at different things. Like if you look at me during the live session, I usually look at the news. I look at CNBC. I try to see if there's anything going on causing price to move in a certain way. And if there's too much stuff going on, then I usually just hold off the market. Like I think today there's something going on this morning with the new COVID news, with regard to I guess the new vaccine and just like the data and stuff. So when that's happening, I just avoid it because obviously you can see right here that price spiked up or it spiked down. So market opened right here, it spiked down like 1,000 pips, and then immediately after, it spiked back up 1,000 pips, and then immediately after, it spiked right back down another 1,000, 2,000 pips, right? So you just want to make sure that you're not trading when the market's like moving kind of crazy.
Okay.
But if you're applying the daily strategy, it's fine. You don't have to like worry about taking anything past like 10 o'clock your time. It's just the first signal that happens after. Like obviously, if you took this one here, this one would have lost, and that's the reason why I avoided this one. So this one right here would have lost. It's all good, it happens. But let's look at the one before that. So this is the one from today on the 16th. If we go over to the 15th, I don't even think there was a signal on the 15th. Yeah, because the market opened here at 6:30, and usually by 10, we call it a day. If it hits like 10 o'clock and there's no signal, like this one right here, we wouldn't have taken this because it has to be a valid signal. But once it reaches 10, if there's no entry there, we just skip it. We don't take it for the day. Let's go over to the 14th oh no, so there's only 2 days this week. It's only Tuesday. So today we would have skipped this one because of what was going on in the news. For this one right here, we didn't have a trade on Monday. But if we go back to the 11th, which was Thursday, because we don't take it on Friday, but if you go back to the 11th, which was right here, you can see that this was the opening candle, and then following it was this one right here. This is the first valid signal after open. And if you were to take this trade right here, this would have hit, I believe. Yeah, so this would have hit TP right there. So if you take all these into consideration, like today's would have been a loss if you took that trade, and then if you took the one on Thursday, it would have been a win. So you'd be at break even at this point. And then if you keep going farther back, so that's the 11th, and then the 10th over here is another day. Same thing again right here. Market opens at 6:30. You take the first signal after open, should be this one right here. If you took this one, then this one would hit full TP as well. So you can see, like, if you run it by probabilities, you're going to end up in profit regardless if you take every single trade. But you got to remember to take every single trade because you can't miss one day. Because say, for example, you missed this day that was a win. You missed that on, your win off that trade. And then say you missed the trade the following day on Thursday, you would have missed that on this trade as well. But then if you took the trade today and you lost that, you'd be in the negative. Because it's, like I mentioned, it's a game of probability. You have to keep taking all the trades because the probability is above, I forgot what the probability, it was like above like 76% or above 80% if you take every single trade. Because I went and back tested this strategy like 10 years. So I know what the strategy works like through all market conditions. Like it went through the COVID year and it still went through like years before that. And it was still pretty consistent all throughout. So, for me, that's why I trust this strategy and I just take it whenever I see it. Unless there's something that's like causing manipulation in the market, like today. So that's just something you got to keep in mind.
Okay. And I know, like, I think all last week, I think Monday was just a slow day, but I made it up on Tuesday. And then Tuesday hit, I think Wednesday hit, Thursday hit, I think Friday, I took the L. I think
just avoid Fridays. Yeah, don't take the daily on Friday because the problem with the daily on Friday is that, like I mentioned, there's a lot of manipulation. People try to sell off before market close, and then you just have that spike up at the end, like happened to you last week. So I would avoid applying the daily strategy on Fridays for sure, and I think that's about it. Just don't take the opening candle because, like for example, here if you took this trade on the 11th on the opening candle, this would have been a straight loss because right after it opened, it came right back down. Like even though the signal came like on the open.
Okay. All
right, cool. So is there any other questions or you want to cover anything else?
I'm just I got to turn around, play around with this scalp a little bit more. And kind of master that because I think that would, give me some more confidence And then I feel a little bit more confident even doing the K2 strategy again on the Forex pairs. Like I said, just seeing what I did with the SR, just kind of just being careful where it's at before I go into it.
Yeah, no, definitely. Yeah. So, what I recommend is just keep practicing and run through it. And then I'm sure as you practice through, you'll probably have some questions. And then once you have questions, we could hop on for another session because I mean, it's, these mentoring sessions are meant to just improve what you already know. So like once you go and you apply the strategy and you find stuff, I'm sure you're going to run into stuff. You're going to run into issues where you're going to run into trades where you're like, oh, should I have taken this? Or if you took a loss, you're like, why did I lose this trade? If you just document them and just, write down the timestamp, we can go back and look at that at a later time.
Okay.
But it's all going to come through practice and repetition. You're never going to learn until you actually do it yourself. So I think that's going to be the key right there.
All right, cool. I appreciate that, Shawn.
Yeah, definitely. Yeah. But yeah, if you have any other questions, feel free to reach out, or that once you run into some issues, we could set up another session and then we can go over it and drill down it even further.
Okay. I appreciate that.
All right, perfect. So we're all done for the day, or you have any other questions?
I'm good, man. I see you in the morning session.
Perfect. Yes, I'll see you tomorrow morning.